So this is a true story, and it's sad because seniors who were sold a risk-free retirement with reverse mortgages, now they face foreclosure. And you're going to see which seniors are targeted more often. And, without even taking a wild guess, right under this title, you'll see seniors were sold a risk-free retirement with reverse mortgages now face foreclosure. Urban African American neighborhoods are the hardest hit as nearly 100,000 loans have failed. And so this was put out June 13, 2019 by a Nick Penzen Stadler and Jeff Kelly Lowenstein out of USA Today. And so this really has happened and really is still happening. So, in a stealth aftershock of the Great Recession, nearly 100,000 loans that allowed senior citizens to tap into their home equity have failed, blindsiding elderly borrowers and their families and dragging down property values in their neighborhoods. So, in many cases, the worst toll has fallen on the ill equipped to shoulder it. So, urban African Americans, many of whom worked for most of their lives, then found themselves struggling in retirement. So, alarming reports from federal investigators 5 years ago led the Department of Housing and Urban Development to initiate or a series, they made a series of changes to protect the seniors. So out of USA Today, reviews show that the government foreclosure data found a generation of families fell through the cracks and continue to suffer to this day, of course, from reverse mortgage loans written a decade ago. And so the elderly homeowners were wooed into borrowing money through the special program by attractive sales pitches. And so this is sad, but it's true. It has happened. And so when they missed a paperwork deadline or fell behind on taxes or insurance, lenders moved swiftly to foreclose on their home. So so these were people who were in dire need of cash or both. And so as soon as they missed something like a deadline or they fell behind on payment, then they found themselves in foreclosure. So those foreclosures wiped out hard-earned generational wealth built in decades since the Fair Housing Act of 1968. And so Leroy Roebuck, 86 years old, these are some stories of real life people who have been victim or are right now victim to this. Leroy Roebuck, he's 86 years old. He rode the bus his entire life and career, okay, to a nearby curtain manufacturer. And when he needed to make home repairs, he turned his reverse mortgages. He turned to that after seeing an ad on television. So 10 years ago, he forgot to renew his homeowner's insurance, which cost him about $2,000 a year. So including fees and penalties, his loan servicer says that he now owes them $20,000. And so Roebuck, which you're about to see him, Roebuck's first foreclosure notice came in the mail 6 years ago, and he still is fighting to hold on to his brick wall up. Um, he's still fighting for his home, basically, that he bought from his parents in 1970. So living in it through a special health exemption program to foreclosure. So he's trying to hold on to his home. So this is him right here. His name is Roebuck. I'm trying to pan up. That's an advertisement, so sorry about that. His name is Leroy Roebuck. He's 86 years old. And so he's fighting basically to keep his home. And so basically what this article is going to go into is the lives of senior citizens, primarily African American senior citizens who worked hard all their life. They were able to purchase a home, and they were somehow lured into these reverse mortgages, and these people basically took advantage of these people. and now they're in a retirement age, or they're not really working anymore because they're retired, and so they're hit with foreclosure. And so they basically preyed upon African American senior citizens. And this is really sad right here. So this guy, he's trying to fight for his home that he bought from his parents in 1970. So Leroy Roebuck, 86 years of age, of Philadelphia, is fighting to keep his home of at least 55 years where he was raised, and where he raised all of his children. And so I told my son never. They ain't going to take my house, Roebuck said. So I'll go to the deep blue sea. They're not going to take my house. So elderly homeowners and their adult children told similar stories of big city neighborhoods across USA. So I don't know if you've seen some of my other videos where I talk about Inglewood's issue. Recently, they went to a town hall meeting and they tried to fight for, a temporary cap. I believe it's 5%, but they had went up as high as 8%. They were rent gouging, and mostly in neighborhoods of people who are African American or Latino. And what they've been doing is rent gouging, and they've been raising rents for people who are harder earners, working people, but they just don't make those types of, incomes to be paying that type of rent. And then if you see some of the apartments that they're paying this high rent for, I mean, I'm not saying that the apartments are trashed, but if you live there a number of years and they don't keep up the maintenance, and then you have appliances that aren't working, you have to keep complaining about things being fixed, and they want like sometimes 1900, maybe 2000 for apartments that, they don't have a lot of amenities. And so they're rent gouging people. And so that's the fight with that. With this right here, senior citizens who have been preyed upon and taken advantage of simply because they're African American senior citizens and they're in a situation. And so these people took it liberty upon themselves to just take advantage of these people. So borrowers living near the poverty line, back to the article, in pockets of Chicago, Baltimore, Miami, Detroit, Philadelphia, and Jacksonville, Florida, are among the hardest hit individuals, according to the first of its kind analysis of more than 1.3 million loan records. So out of USA Today worked in partnership with the Grand Valley State University with support from the McGraw Center for Business Journalism. So consumer advocates said that the analysis supports what they have complained about for years. The unscrupulous lenders targeted lower income Black neighborhoods and encouraged elderly homeowners to borrow money while glossing over the risks and requirements. So USA Today found the reverse mortgages end in foreclosure 6 times more often in predominantly Black neighborhoods than in any other neighborhood that are 80% white. So even comparing only poor areas, Black neighborhoods fare worse. So in the zip codes where most residents make less than $40,000 a year annually, the analysis found that reverse mortgage foreclosure rates were 6 times as higher in Black neighborhoods than in white ones. So the foreclosure disparity resembles a more familiar scenario from the late 2000s when subprime lenders targeted specific neighborhoods with risky loans doomed to fail, according to the nation's lead reverse mortgage researcher. So national reverse mortgage foreclosure rates 2013 to 2017. So pockets of the country, particularly urban African American neighborhoods, were hit the hardest by reverse mortgages foreclosure. So many were targeted by reverse mortgage brokers after the recession, when money was tight in neighborhoods where credit was traditionally less accessible. So enter your zip code to see your local rates. Click or tap for more details. So it has a map here if you look at this article. So it goes into it, the U.S. Department of Housing and Urban Development, U.S. Census Bureau. So it has additional articles about reverse mortgage foreclosure and a map of how many people who have been hit hardest, which primarily the African American community. So Stephen Moulton Associate professor of public policy at Ohio State University said cash-strapped minority borrowers were easy targets for bad apple reverse mortgage lenders, capitalizing on a market shunned by traditional lenders. So these areas had demand and they couldn't access credit any other way, she said. So in hundreds of reverse mortgage default cases reviewed by USA Today, the homeowner original financial needs were basic, the kinds of challenges like house repair, medical bills, and that those with easier access to credit and more disposable income can weather with a second traditional mortgage or home equity loan. But brokers desperate to replace income lost from the real estate crash with new commissions didn't wait around for homeowners to come in and seek reverse mortgages either. They went to where they knew people needed money and sometimes walked door to door targeting houses with decaying roofs or leaky windows. Door hangers advertised a tax-free benefit for seniors. And so Cheryl Parker, a councilwoman on Philadelphia North Side, called reverse mortgages a scourge on her community that has put unnecessary financial and emotional strain on senior citizens. So not only has the area weathered more foreclosure, but the damage cuts deeper. So now that asset, that equity is being drained out of some of the most vulnerable communities in America, Parker said. So we've asked, why was Philadelphia so targeted to get this loan product? America should pay attention. So the broader public also pays a steep price. Reverse mortgages are insured by Federal Housing Administration Fund, which is in the red more than $13.6 billion. So because of an increase in claims paid out to reverse mortgage lenders since the recession. So federal regulators and industry leaders caution that numbers alone tell only part of the story, since many foreclosures result from the natural end of reverse mortgage, the homeowner's death, that is. So the average term of a reverse mortgage is about 7 years. So if a family member is not willing or able to repay the loan, lenders push the property through a foreclosure process, which basically you're about to lose your home. So regulators said that actual evictions of senior citizens are rare, but there is no way to verify that, though, since HUD, Urban Development, the top government regulator of home equity conversion mortgage loans, does not sign off on evictions or even count them. So a foreclosure is a failure no matter the trigger, said Sandy Jolly, a California consumer advocate and a whistleblower who helped the government secure an $89 million penalty. So against reverse mortgage companies 2 years ago. So HUD or anyone else to say that people dying in foreclosure is a natural end of a reverse mortgage is ridiculous, Jolie said. No consumer gets into one of these thinking, eventually my home will go into foreclosure. So all foreclosure are unnecessary, and this increase indicates a failure of the program to deliver on its promise. And so promised retirement stability through reverse mortgages, seniors now face foreclosure. And this happens with urban African Americans that are hit the hardest. Nearly 100,000 loans have failed. And so there's a lot of talk about this, I guess, in this clip right here, but it goes into more details. So how reverse mortgages work. They were invited in 1961 by a Maine leader trying to help a widow hold on to her home. So the concept was piloted by Reagan administration and exploded in popularity in the 2000s as a way for seniors to age in place, is what they quote unquote say. So they work like this. Lenders appraise the value of a house and allow homeowners to borrow back money against the market value. So borrowers can stop making monthly mortgage payments and they can stay put for life as long as they maintain the home and pay property taxes and insurance. So for years, reverse mortgages required no credit check. And government mandated financial counseling can be as easy as 20 minutes in a phone call. So at the end, a move out or a death of or default, the bank calls the loan due to be paid back either by the sale of the home or an heir or homeowner repaying the loan money. So lenders and their investors make their money through origination fees that can top $15,000 with fees and mortgages insurance and by charging interest on the loan balance. And so, for many homeowners, reverse mortgages are relatively safe because the borrower is insulated from ever owing more than the initial appraised value of their home. But problems emerge in a wake of a full draw loan in the late 2000s when reverse mortgage lenders issued a lump sum to a borrower. So sales picked up as Americans began struggling financially and property values eroded. So since reverse mortgages assume the home will continue to appreciate, loan balances in some cases ballooned well past the market value. A post-recession home, a post-recession home, inflated appraisals also played a role. So Leroy Roebuck's home was appraised at $112,000 in 2008. That allowed him to take out up to about $83,000 in equity. By the time he was solicited for a second reverse mortgage, an appraiser said it was worth $241,000, allowing him up to $163,000 and more. He borrowed $102,000 in all. So the 104-year-old house near Temple University is worth far less today, about $165,000. So at the National Reverse Mortgage Lenders Association, President and CEO Peter Bell said ideal borrowers didn't always match up with those targeted. We're paying for an era where people were borrowing to survive, Bell said. So we now look for people that are comfortable in their retirement with a plan and resources to maintain their basic obligations, but could use a little extra help for a particular need or quality of life. Foreclosure epicenter also damaged by redlining. And so this gets deeper. And so this is pretty serious because these areas are hit and it's extremely racialized as to why it's done. So the area of Chicago encompassing 6 zip codes endured more than 1,000 reverse mortgage foreclosures in the past 5 years, more than many entire states. So pockets of the area were still suffering from the 1930s redlining that froze out Black borrowers for decades. So this is where you get into, at one time, there was getting home was having, you know, your own like family wealth. With all this going on, how could you build wealth through home buying when you have all this going on? And it's racialized, heavily racialized. So more than many entire states in Chicago, this has happened. So pockets of the area were still suffering back in the 1930s from redlining that froze out Black borrowers for decades. And so these are a map here, and it shows the zip codes. And so in the red here, the red line areas. And so I don't know if you can see this because it's really small. So I'll just call out some of the names of the places that were redlined. Grand Crossing, and this is in Illinois. South Side of Chicago, Washington Heights, Morgan Park, Burnside, Roseland, West Pullman, Auburn, Gresham, and Inglewood. Okay, Grand Crossing, I think I said that one. So this is from the Census Bureau, University of Richmond, mapping inequality. Okay, so foreclosures siphon life from struggling neighborhoods. So the scar of reverse mortgage failures leave on neighborhoods that can be seen on the drive-through of Chicago's South Side with longtime residents and community organizers Pat DeBonnet. So a cluster of 6 zip codes together have endured more than 1,000 reverse mortgage foreclosures over the past 5 years, higher than many entire states. So boarded up homes and empty parcels have followed since then. So DeBonnet points out blocks of Roseland area as absolutely devastated. So Yale 113th Street or 113th fits that description. And so in the 60628 zip code, so a 60628 zip code, it is the epicenter of the reverse mortgage foreclosure crises, where more homes have been seized than anywhere else in the nation. So the house at the end of the block that abuts train tracks is intact, but many others along the leafy green street are either boarded up or vacant. So empty single family bungalow style houses dot many of the blocks in neighboring Pullman, a comparatively prosperous neighborhood that is home to a Philip Randall Pullman Porter Museum. So, named for the fabled labor leader, the museum honors Black workers' contributions to American history. So, this woman you see pictured here, her name is Lori Frazier. She pauses to reflect for a moment while looking through her parents' home. After Frazier's father passed away, she and her family were surprised to. So there's a story behind this. Okay, let's see if I can click on it. I don't know if it will take me out of things. Okay, her parents had been taking out a reverse mortgage on the home. So she had hoped to move into this house with her son, Amari, after her parents died but cannot afford to pay off the large reverse mortgage. So you know that house probably was seized because of that. And so about 13,000 seniors live in the 60628 zip code, where lenders wrote about 760 reverse mortgages at the height of the program through the 2009. The loan origination rate, about 57 per 1,000 seniors residents, is more than 5 times the national average. So the foreclosure rate is even worse, more than 9 times the average. After foreclosing on a reverse mortgage, the Cook County Chancellor Court taps people such as private attorney Gerald Nordgren to investigate who might have a claim to the house or be interested in buying it. So, for many family members, a conversation with Nordgren is the first that they learn that their parents signed the reverse mortgage documents a decade ago. So, adult children that have been trying to take care of their mother, father, or both get the idea that when mom and dad passes, I'm going to have a little inheritance, or get, which is called, wealth building through home owning and passing on your wealth to your children. Well, that's not what happens in these cases. And so adult children that have been trying to take care of their parents, their mother, father, they think they're going to have a little inheritance. Nordgren said, so then the death happens, and here comes the foreclosure right after. And swiftly does it come. So that's what happens to Lori Frazier, whose father, Charles, died at 88 years of age from a heart attack in the family home a few miles west of Roseland in Beverly. So at that point in December of 2017, an unpaid $4,351 property tax bill led to the default. So as soon as they are not able to pay the taxes, boom, they come in and they just seize the home. So Frazier tried to negotiate with the lender, but then her mother, Aussie, died last May. And so without the actual owners, what can you do? And so the house can no longer be passed on to the children. So Lori Frazier and her daughter and Tony admire a purse left behind by Lori's mother, Ossie's photos of Charles and Ossie Frazier that you see on the right, and that was the parents. And so they're prominently displayed in Frazier's family home in Chicago. And so it's just really sad because when we talk about Black wealth building, that was one of the ways that people, that's one of the ways people build wealth is through home ownership. And if you have racism with lenders and them targeting or redlining areas, which that happened. And now you've got people who are lenders who are shisty and they're out for themselves just for the money and they're targeting African Americans who are vulnerable. And so the loan servicer, Celine, filed a foreclosure lawsuit on the 3-bedroom 1920s brick home. It had been in the family since 1974 after Aussie came north from Mississippi and met Charles in Chicago. So Celine told Frazier in February that she could buy the house by paying off the loan's balance, which was $209,053, of course. So including fees and interest as well. So Frazier and her brother said it was far more than they could afford to pay. So the impending loss of the house she grew up in weighs on Frazier and the children and the grandchildren as well. Until the foreclosure is finalized, they have access to retrieve belongings. So as she packed, Frazier's relived memories of the home filled with jazz music playing in the cul-de-sac with children from the young families and sneaking out at night to visit her high school boyfriend. Her older daughter, Antoni, shares her mother's um, ache of over losing this family home. So, as she tried on one of her grandmother's winter coats at the house a brisk morning in February, she recalled an annual block picnic and holiday celebration. So, it's devastating to hear that no one can save the house, of course, is what she's talking about. All those years and everything, the memories they worked for. So, she said, so they were retired and living on a pension. And so that's usually when people are elderly people, they are not working, they're living through retirement. They worked all their life. And then you get that age in your 80s, you're not going to be, working till you drop. You're going to at least have some mellow out time, and then you may, by that time, you also may have health issues. So what happened is the question she asked. The Frazier's family foreclosure is not happening in a vacuum. Each foreclosure depresses homes values within 600 feet by 1%, according to the study in 2006 in the journal Housing Studies. So as foreclosure mounts, the study says that the figure compounds. So 5 foreclosures in a few city block means 5% loss for every neighbor. It affects other houses that of people that live close by. Next story that is associated. You see this woman here, and she does not look happy, of course. Her name is Patricia Blair. She says that she found her husband, Richard, in their bed after he died from heart problems in 2016. So she says she thinks of that day every time she goes to bed. And so we can figure out what probably happened. Grieving spouses face eviction. And so this is a case where the person's actually the homeowner, but because it was two of them and one dies, the other ends up faced with all of the the bills and can't pay it, and now you're faced with eviction or foreclosure or default. So Patricia Blair moved back into her family home in 2004 and helped care for her mother. Now this is different. This one right here. Okay, so she cared for her mother and purchasing it 3 years later when her mother moved to a senior facility. Okay, so the row home on Lay Avenue is in a neighborhood that is 94% African American, which is a high percentage. Basically, the neighborhood's like a black neighborhood. So in 2010, when brokers from Consumer Credit Counseling visited North Philadelphia home Blair then shared with her husband, Richard was 62 years old and she was 60 years old, so below the federal threshold to qualify for a reverse mortgage. So they could receive $35,000 in loans. Her name was taken off the title. That makes it even worse. So, and she became what is known as the industries as a non-borrowing spouse. So That's the industry way of terming it. So when Richard died in 2016, the reverse mortgage solution, the lender launched a foreclosure action by suing Blair. So widows not on the title meet various deadlines, okay? They must meet them. So at 90 to 120 days after the death, to provide their loan companies with death certificates and other documents. So Blair sent the paperwork and she thought solved the problem. So she discovered that she had missed one document, okay, changing the deed to her name with a 90 days, months later after the foreclosure notice arrived in her mailbox. They didn't waste any time. Blair is meticulous about her life, paying her bills on time, keeping her house impeccably neat, and she has organized every scrap of paper tied to her reverse mortgage into handbags that she lugged with her to Philadelphia's downtown courthouse. So she pretty much thought she was very meticulous and on top of everything. But just one document. She said she can't understand why she needs to move out. Just thinking about it makes her sob. So this is her here. So she has to get all her belongings and leave. Patricia Blair looks through old clothes as she prepares to vacate her second generation home and move into an apartment. She is overcome with emotion as she looks through her wedding photo album in the living room of her home. So these people are, it's not a mistake. It's not an accident. These people are deliberately targeting African Americans who are in a situation where they're cash strapped or they may miss one document or one payment and boom, their house is gone. Just like that. And what makes it so bad is they target people they know are not able to make the payments or they know they're going to make a mistake because maybe they can't see something or maybe they forget, elderly people, things like that, or they miss a payment. So even though my husband didn't have a will, I know the facts. I'm his wife 40 years. Blair said, "How do you think I don't deserve to be here?" After battling for almost 4 years with the help of two attorneys, Blair has given up. Now she's 69 years of age and she plans to move into an apartment this year. Blair's situation is not unusual as it may sound, but even when both husband and wife are old enough to qualify for reverse mortgage, lenders often advertise them to remove the younger spouse, okay, from the loans and titles. So federal rules allow people to take out more money if they are older based on actual tables, actuarial tables, showing that they have fewer years left to live. Okay, so they're able to take out more money. So a higher loan balance means higher closing costs and a bigger commission for the brokers, which is very, very shisty. So, and I wanted to add in there, even in Los Angeles, I believe that has gone on in South Side of LA because there are houses that are dilapidated and houses that people are just barely keeping up with maybe I would just say a glue gun and maybe some band-aid tape. And people are older or they don't have enough cash to fix the home and they target people like that. It happens all the time. So in response to the lawsuit, getting back to this story filed in AARP, the federal government took action in 2014 to protect surviving spouses by giving them additional time if their names were not on the loans. So that doesn't include such as those such as Blair's, whose loan predate that solution, adding to the spike in foreclosures of loans issued at the height of the recession. So nearly 50 homes in Blair's neighborhood had reverse mortgages that failed in the past 5 years. 50 homes. That puts her area at the top 1% of all zip codes nationwide with at least one foreclosure. So Bell, the National Reverse Mortgage Lending Association president, said lenders would prefer to extend the deadline for older borrowers, but fear violating HUD guidelines. The federal agency is considering that action. So, no matter how heinous or heartbreaking the case, it is not all our call. There's no wiggle room, said Leslie Flynn, a senior vice president at Reverse Mortgage Solution, a lender. So it takes a toll on employees. So sales pitches targeted seniors. These are the sales pitches that they're talking about. So for years, reverse mortgages companies have blitzed daytime television with trusted celebrity pitchmen, including Fred Thompson, Henry Winkler, and Robert Wagner, to name a few. So ads air primarily on daytime syndicated programs such as MASH and game shows such as Wheel of Fortune, inviting seniors to call now to the 800 number on the screen. So Winkler worked for one of the reverse mortgages online bank under the Quicken Loans umbrella. So in one television spot, he told viewers that they can call now and that they would receive a free magnifying glass to read the fine print of their reverse mortgage. Wow. So like that, the others, he doesn't disclose that he's a paid pitchman, not a satisfied consumer. So just because you see Henry Winkler and you see um, famous people like Robert Wagner and Fred Thompson, that doesn't mean they have bought into these reverse mortgages. They're just paid pitchmen. This is what they're saying. And so it looks attractive to seniors. So, like the others, he doesn't disclose that. It says that he's a paid pitchman. So he doesn't tell you that, basically. They just do their job. Marketing pitches is basically what it is. For reverse mortgages, also came right to seniors' doorstep through mailers as well, door hangers, and door-to-door salesmen as well. That was another marketing strategy they used to pitch these reverse mortgages. So they offered to eliminate monthly payments permanently with a risk-free way of being able to access home equity. Okay. So who wouldn't want to do that? It sounds good. It looks attractive. You got famous people pitching it. And so how could you not do it? So that's probably what people were thinking, but neither of which is true, according to the Consumer Financial Protection Bureau. Always retain ownership. Remain in your home as long as you wish, and you can't be forced to leave. Where other frequent hooks, these were the hooks, the things that would sell people on these reverse mortgage pitches. And so, according to the investigations by federal regulators, so this is what they were doing to elderly people, especially people who are cash strapped or they figured they're doing the right thing. Who are these two women? I'm going to give you their name. Monique Sharp is left, says she suspects lenders targeted the neighborhood where her mother, Phyllis, at the top, lives because her home values were rising. And so this is the daughter and this is the mother. And so they were also targeted, or the mother. Phyllis Sharp, 78 years of age, found a hanger from Maryland, which is something they put on the door based on all financial services on her doorknob in 2011. So the same hanger seemed to adorn every front door of her South Philadelphia neighborhood, she said. So as a retired college pastry chef, Sharp felt pinched financially. And so she was attracted to the seemingly risk-free solution, using $56,000 loan to pay off the $33,000 that she owed on her traditional mortgage, and do some repairs on the home, including new windows. But today, her dispute is more complex than most. Sharp said she never received $18,000 installment check. The lender said it sent her. So Sharp's daughter, Monique, suspects her mother, predominantly Black in a gentrifying neighborhood, as there's not only just in Philadelphia and some of the neighborhoods I called out, but Los Angeles is also has gone through the gentrifying process. Most of the cities and the Black neighborhoods have gone through this. This home is something you got on your own, and now somebody is coming to try to take your hard work away from you, she said. It's malicious. I have to agree on that. And so representatives from all financial services did not respond to written questions for this particular report. Of course not. They don't want to talk about what they've been doing to people, and they know what they're doing. So a 750 member class action suit in 2011 accused Urban Financial Group of targeting African American women homeowners with deceptive marketing and unfavorable loans rates in some West and South Side neighborhoods of Chicago. So the homeowners law firm hired a statistician, which I guess they do statistics on this, who found that in 1 year, 70% of the urban financial loans in Chicago went to areas that were at least 80% African American, which is a high number, basically black neighborhoods. So they knew what they were doing. They knew where they were going. So in 2001 to 2009, the company wrote more than a half of its reverse mortgages in zip codes that were 80% black neighborhoods, according to USA Today analysis. So the suit alleged brokers targeted minority homeowners for the mortgage products, overpriced home repair work that they did not need or cannot afford, to capitalize on elderly widows unaccustomed to both the home's finances and home repair. So the lead plaintiff in the class action suit was an 85-year-old widow. She took out $181,000, 81 and $800,000 reverse mortgage with high interest. Okay, and these people don't think either have eyesight problems, or if they don't have eyesight problems, they can't really, even if you got good vision, sometimes they put things in fine print you don't understand, and they put jargon in there that's, you know, you're unable to comprehend, and you basically need somebody like a lawyer to read it for you. And so, or somebody that's in this business that can read it for you and they're honest and they can tell you what these things mean. So with the high interest and the interest rate and the more than a $12,700 in closing costs and fees and premiums. And so normal closing costs for loans on other type of ranges 2% to 6%, as low as $3,600 in her case. So Urban signed a settlement agreement in 2013 denying all wrongdoing of paying borrowers $672,000. So corporate upheaval has marked reverse market. Okay, so as reverse mortgages exploded in popularity in 2001 to 2009, the three lenders originated a third of the new loans, nearly 200,000 in all. So since then, Bank of America and Wells Fargo have exited the market, and the second largest lender, Financial Freedom, faced massive federal penalties related to false reverse mortgage insurance claims as it was sold to other banks. So in their wake, the market began to fragment. So the top two lenders, California's based American Advisories Group and One Reverse Mortgage, together account for about 1 in 5 new loans. So around 1997, something else has started to shift. Until then, residents in African American zip codes have received fewer than 200 reverse mortgages per year. But the HUD data shows the number percentage of loans is to residents of black neighborhoods has accelerated. Okay, throughout the 200s, they took on the loans at 2 to 3 times their share of the population. So small volume lenders such as Best Mortgage Service in Detroit, Gateway Reverse Mortgage Group in St. Louis wrote 81% to 63% of their loans respectively in neighborhoods that were predominantly black neighborhoods. Hardest hit cities, borrowers living in the property line of pockets of Chicago, Baltimore, Miami, Detroit, Philadelphia, Jacksonville are among the hardest hit by reverse mortgage foreclosures. And so those are to name a few. So the figures surprised Jonathan Teal, former owner of Gateway. He folded the company in 2011 in the wake of the Dodd-Frank Act, okay, which he said overregulated lending. The company routinely set out $10,000 piece direct mail campaigns that blanketed St. Louis metro area, Teal said, so they knew what they were doing. That's my input. He said his company did not target specific neighborhoods or races. But we weren't cold calling anyone. We contact whoever we respond to or our mails, Till said. So that's their way of probably their alibi, saying whoever responds, then that's who we cater to, who respond. But they're going to neighborhoods that are like 81% black, 90% black. You know what neighborhoods you're going to. You're not going to the white neighborhoods that are 91% white neighborhoods or 81%. These are black neighborhoods. We know this. You can just hear the names of the cities that are called out. You know what it is. So they knew what they were doing. Of course, I would prefer larger, higher value homes, but you take what you can get. Yeah, right. So, as the loan activity spiked in 2009, a wave of complaints, of course, about marketing and servicing prompted Obama administration and state authorities to crack down. So, 6 states issued penalties against one lender. American Advisors Group, claiming deceptive marketing and fraud in direct mail solicitation that posed as official government corresponding marked notice of government benefits. And so when older people see that, they're thinking, oh, this is safe. It's government benefits. So, I mean, even regular people that if you're not old, you're like, oh, government benefits must be safe if you don't know any better. So in 2011, the Consumer Financial Protection Bureau directed all reverse mortgages advertisers to disclose that the loans must be repaid after death or a move out and aren't a government benefit or risk free. So that didn't solve the problems. 4 years later, the Bureau put out a consumer alert about continued deceptive marketing. And in 2016, it fined 3 companies $790,000, American Advisors, uh, Agene Financial, and Reverse Mortgage Solutions. So Reverse Mortgage Solutions ramped up its sales pitch to seniors with a false sense of urgency, according to the government. So one call script told potential customers they needed to sign by the end of the day, or the company would turn your file down and you will miss out on a tremendous money saving opportunity. And that's another way to get people to hurry up and sign their house over, basically. So, in the wake of sanctions on advertising, as well as improved underwriting and financial assessment tools, fewer seniors take out reverse mortgages. At its peak toward the end of the past decade, 114,000 loans were written. By the last year, that had dropped to about less than 50,000. Okay, so like the allowances for widows in 2014, many of the changes did nothing to protect the thousands of homeowners who already had paid millions to the lenders who wrote their loans. So, and many do little to stop the aggressive servicings of loans that can push seniors closer to foreclosure. So that's the big threat. So the 3 companies accepted by CFPB penalties without admitting wrongdoing. In a statement after the penalty, American Advisors Group committed to comply with federal advertising. So the parent company of Reverse Mortgage Solution, DTech Holding, filed for Chapter 11 bankruptcy this February for the second time in 14 months. Okay, so in April, DITech rather, asked that the loan foreclosures be allowed to continue during the bankruptcy proceeding, and a judge agreed. So small issues snowball for seniors. So Leroy Roebuck's loan is held by Reverse Mortgage Solutions, but his experience follows a twist and turn in the industry. So Roebuck forgot to pay his insurance bill in 2010, and it cascaded into a foreclosure proceeding. So Bank of America was his lender. And I know this is going to be scary to hear this, but Bank of America is like all over. Responding to the mispayment, the bank took out its own insurance policy of $5,000 on the home and added the bill to his loan balance. Okay, so Leroy Roebuck has a special health deferment on his home's foreclosure. So Bank of America announced it was leaving the market in 2011. And the next year, it transferred Roebuck's loan into Champion Mortgage, a lending division of Texas-based Nation Star. Okay, so after that transfer, Roebuck's tab mysteriously snowballed to $11,000, and it hit $17,000 by the year of 2014. So Champion Mortgage attributed the increase to unpaid taxes, insurance, and various costs and counsel fees. So that final bump triggered the foreclosure. So Roebuck entered a city-run diversion program to try to negotiate a proposed repayment plan, which was rejected by lenders. So the loan was transferred to Reverse Mortgage Solutions the following year. That company tacked on more fees, making his tab $20,000 as it is. So the Reverse Mortgage Solutions spokesman declined to answer a series of written questions for the report. So even as Roebuck struggled, those in charge of the reverse mortgage solution continued to profit even with this man struggling and he's trying to keep his home and he's elderly. So the Tampa based lender has been led by four CEOs since 2016, and many of whom reaped huge corporate bonuses, even as the company foundered. Okay. Okay. I believe it said floundered, but it said foundered. But it doesn't make sense to me. I think it meant floundered. So maybe they had some issues in the past or they have history. But Anthony Renzi, president and CEO of Walter Investment Management, received a compensation package of $5 million in 2016 for 4 months of work. Just 4 months of work, he got $5 million. So while the company's stock slid, and I believe that was what the word meant, floundered. So the company's stock had slid to 62%, largely because of corporate debt and a long string of financial losses that earned it the worst performing company label from a business journal. And so by then, with the help of another low cost community attorney, Roebuck, partially blind, this is the man's illness. When you're 80 something years old, what do you expect? So he's partially blind and he has, I believe, arthritis, had received a health deferment of his foreclosure. Okay. So he has filed both the Chapter 7 and 13 bankruptcy and lives in the home year to year, and the mercy of the judge continuing to rule in his favor. So this is like a nightmare man, he said. So this is him talking. And so it says this report was supported by McGraw Center for Business Journalism at the Newark Graduate School of Journalism, the City University in New York. And so Jeff Kelly Lowenstein is the assistant professor of multimedia journalism at Grand Valley State University. Okay, so it goes into that. So related stories from USA Today Network. And so these are stories. So that's basically the article. And so this is sad. So this is the guy's home he's trying to hold on to. And you see how it's located. And he had gotten his home in 1970, and they're just basically trying to take this old man's home. It's so sad. So let me name out the cities that are hardest hit. Some of the cities, just some, because I believe it's a lot more. But it says Chicago, Baltimore, Miami, Detroit. We know about Detroit. If you don't, you can just look up some of those areas where homes, you could buy them for $1, but you don't want to live in them, and they're boarded up and they're abandoned. There's streets where there are rows of homes that are just abandoned. And so Philadelphia, Jacksonville, those are just to name a few. And there's been a lot of gentrification in some of these cities. Los Angeles is one. And whenever they put like big stadiums and things like that, they at first they were saying, I remember when they started building the stadium, they were saying, oh, it's not going to do anything to the neighborhood. I had asked a question in a home buyers meeting, and I asked them, I said, well, what if they put, oh, it might rise, the taxes might rise, but generally it doesn't, I said, no, I don't believe it doesn't do anything. I think it does do anything. But lo and behold, in Englewood, by them building the stadium, it has done a lot to people. It is even people that are not even homeowners that they rent in the area. It has caused them to be rent gouged. And so they have to pay the increase of living in an area that now when something is new or something is big and they think it's going to bring more money into the community, you're all going to be homeowners. Everybody's going to be affected by it. Higher taxes on your home, possibly. Renters are going to pay probably a higher rent increases because of the fact that they feel like now the area is being appreciative because they're bringing in new customers and business, new opportunities, and then this huge stadium, which means money, you know. And so, yes, it is going to affect the neighborhood and the community as a whole. It's going to affect a lot of people, and it's going to affect some people in negative ways as well. As it does positive for some people, it affects people in negative ways. And so, who are the hardest hit? African Americans in a lot of these places, when it comes to these reverse mortgages. And so I don't know if this plays or not, we'll see. But I was interested in this article because I've been reading about home buying. I've been reading about stock markets, how people live, how they think about money. And I know this seems like a bit much, but just how some people can be really like cutthroat and insensitive. And this I feel like was in a lot of ways targeting people they know were the most vulnerable based on race, based on age discrimination as well, because people are elderly, and the fact that they figure you're uneducated about these mailing and leaflets that they send out, these pitches that they have on TV, which is horrible. They should take them off the TV. But anyway, let me see if I can play this video.
Minimums and fees seem to be the foundation of your typical bank.
So it's probably going to start off with a commercial and then it'll go into the story, probably a family that has been hit with reverse mortgage. And so, speaking, okay.
You think that everything is fine, but sometimes your parents don't share everything with you, and I wish they would have. Maybe we could have did something beforehand. I would be right living here. I would be staying in this house right here if they hadn't get me this morning. My dad, when they got this house, he told me when they first moved here, he was so excited because it was a nice neighborhood, and he was like, "Oh yeah, we're gonna have the best, for our children and stuff like that." So, and he worked so hard for it. He never told us they had any financial problems. We thought everything was okay. It was 315,000, and the estimate value of this house is 175, and we can't afford to try to rebuy the house because of the reverse mortgage that my parents have taken out. We're just waiting for them to come and get the house because we can't afford to keep the house. It's really heartbreaking. Wherever you find a high rate of home ownership, you will find a stable community. And this product, this loan product, threatens the stability of working class communities and with one of our most vulnerable constituencies, which is senior citizens, because that's who the product is targeted to. So the African Americans and other minorities, the reason why they are so targeted is because this is the constituency that doesn't have access to the prime lending market.
What's often not really looked at is the fact that these are multi-generational homes. So not only is the person in front of me home jeopardized, but their children and grandchildren are really at risk. And if we can't save that home, all of those people need to find other housing, and they're not going to find it most likely together. The people that were marketing these products to the clients I'm now representing miscommunicated information to them about how these financial products work.
Hi, folks. I'm Fred Thompson.
Hi, I'm Henry Winkler.
If you could eliminate your monthly mortgage payments, yet still own your home, would that help you finance it?
You turn your home's equity into cash, and you pay it back when you leave the house.
Take my word for it.
Once upon a time, this product was viewed as a loan of last resort for people who were hard-pressed financially and really had few other options for obtaining any cash. So the reverse mortgage became their immediate solution, and it carried them through several years, but eventually you get down the road where it catches up with you, and there's just not enough cash flow to make ends meet. In all candor, I guess we made some bad loans during that era. I think the thinking has evolved now to recognize that the housing wealth, the home equity that somebody has accumulated, is another resource that should be considered in conjunction with all other financial resources.
It is very disheartening when you've had to look into a child's face and they say, well, you know, my parents were in this house for 40 years. I grew up here. When my parents first bought this home, this was a symbol of pride. It was a symbol of ownership. It was a symbol of self-sufficiency. And now that asset, that equity is being drained out of some of the most vulnerable communities in America.
I blame my parents in a way, but I blame the companies for taking advantage of people like that. You know, you you get them to take out this loan and you charge them all this interest and make the other families suffer when they are deceased. I don't even like to come over here. Like you're going somewhere where you know you can't stay, you won't see it again. I mean, you'll see it if you ride past, but you won't be able to engage and come in. So, kind of.
Well, we moved in this house. It was 5 children. And we moved in the house in 1964. I got married while I was here. I had my children while I was here. My husband passed in 2016. And now, since he passed, they've taken the house from me. Because when my husband signed the reverse mortgage, I was underage. He's 3 years older than I am. So now they want to take the house from me because my name wasn't on the deed. I tried to prove that was my husband. I'm his wife.
Because the city of Philadelphia feels that people's housing is among their most critical needs, it created in 2008 a program where if you get behind on your mortgage, we're not going to just put you into the court and let you fight it out. We're going to divert you into a place where you can come and just talk it over with your mortgage company. It's to diffuse that stress. So there's 11,000 families who are still in their homes as a result of the diversion program. And that's a remarkable statistic. That's something we should all be, the city should be proud of. A district like the 9th district in the city of Philadelphia that has a higher rate of home ownership than even the entire city at large. We were seeing neighborhoods that were once stabilized. Now they had a higher rate of vacancy because of foreclosures. The impact that this product has had on stabilization and targeting one of our most vulnerable constituencies, that is undeniable. People are losing family homes, and that has been so hard and so heartbreaking.
And in a lot of those cases, a reverse mortgage has been just another step in a habitual chain of borrowing. They should have a comprehensive plan that figures out how they're going to use the resources in total to fund their longevity.
The goal, hopefully, of much of U.S. policy is to keep older Americans aging in their homes. Saves us all a lot of money to have them aging in their homes, living comfortably in their homes. If the senior's looking at a reverse, hopefully look at it with the entire family. Sit down. The kids are not inheriting. Right? There's no equity being passed down. If there's a surviving spouse, game plan that. Have some way that you're looking at this product and you're making sure the language is in there. That if the spouse who's on the note passes away, the language should be in that allows the surviving spouse to live out in that home and step into the shoes of the original reverse borrower. and then game plan with savings and have some mechanism where direct deposit, something else where alarm bells are going off when you start having to pay the taxes.
Thanks for listening.